Hello, everyone. Welcome to Achieving Success with Olivia Atkin. I'm your host, Olivia Atkin. Each week, we will discuss the roadmap of achieving your personal and professional success. We will give you real life stories on growing personally and professionally to achieve your life and career goals with the help of some top notch guests. Today, we are speaking with Brian Head. Brian is the CEO and founder of Head Start Equity, a real estate private equity firm that provides passion investment opportunities in primarily value added multifamily properties. Brian is also a real estate agent. He previously worked in corporate full time for 25 years as a digital project manager, stockbroker, and insurance specialist. You can find Brian by going to his website, headstartequity.com, or by emailing him at brian@headstartequity.com. Hello, Brian. It's fantastic having you on the show.
Hello, Olivia. It's great to be on. I appreciate it. It's an honor. Thank you for having me.
Of course. To start off the show, can you tell me what success means and looks like to Brian Head?
Yeah, I think success to me means having the freedom to be able to spend time with your family and be able to do the things that you really want to do. That's what success means to me.
And I think that's a great takeaway. It's doing what you want to do
Right.
and having that balance that you want. You have to sometimes focus on what you're looking for and then evaluate if it's what y- you know is actually being achieved and what those
Right.
steps are. Brian, you spent time and almost what some people would call a full-time career in corporate. What made you decide to enter the corporate year world 25 plus years ago?
Mhm. Well, so I decided, I guess some people have this approach and some don't. So I decided to go straight into working versus getting my degree first. Um, I wasn't exactly sure what I wanted to do anyway, so it kind of made more sense. So I just, started at a local financial services firm here in San Antonio, and that was just for me. That was the best path forward. And then, fortunately, I was able to get my degree while I was working there, and actually, the company paid for pretty much all of it, so that actually worked out nicely. But that, I mean, just deciding that I wanted to kind of get that work experience first was the route I took.
How has that, you know, during that time, getting that work experience, how did that help you figure out what you wanted to get a degree in? Because a lot of people, get their degree and then look back and go, wait, but that's not what I want to do. And then they either have to pivot with the tools they've learned and, try to find a job that will take that degree or say, yeah, I got this, but this is the experience I also have, or they go back to school. So
Mhm.
what were the benefits for you of getting that experience in to figure out what you wanted to do?
Yeah, it's kind of funny actually. So, I was, as you mentioned at the beginning, I was a stockbroker for 10 years. 10 of those 25 years, roughly, I was a stockbroker. And so, um, having, that experience, helped me decide that a finance degree was what I wanted to get. So by going into the corporate world first, that I think it kind of helped me with making that decision on what degree to get. The interesting thing is, though, as soon as I got my finance degree, within a couple of months, I actually then switched out of finance. So it kind of it's one of those things. I mean, I guess it just depends. Everybody's different, right? But you hear those stories. A lot of people get their degree, and then, like you said, they end up doing something totally different. That happened to me, but it was a little different. I was actually doing the job when I got the degree, but then as soon as I got the degree, then I switched. So it just kind of was the way it worked out. It wasn't planned that way, obviously.
I want to touch upon something with you that you brought up is you had the unique experience of doing a job first and then getting that degree. How did your work experience apply, when you were applying what you were learning in the classroom or doing an assignment to understand, you know, the conceptual textbook knowledge to real life? Because as we all know, sometimes what is said in a textbook or taught might not be how it's actually applied, especially in corporate.
Yeah, it actually helped me a lot. I mean, because I was able to bring in some of that knowledge that I had already gained in the financial industry into class. And not only are some of the things that are taught a little different than how it is in the real world, I had that advantage. But the other advantage by working first for me was that I was able to ask more pointed questions and better questions of the professors and things like that because I had that experience. So I would say those were probably two of the biggest benefits of working first. How it worked out for me.
And I think that was a key point of asking those pointed questions, understanding what you were doing in real time while understanding what was being taught to you and knowing what to ask is sometimes the difference between really learning something and being able to apply it or just learning.
Right. Yeah, and I think the other piece is too, I had the confidence to ask the questions too, right? Because I had the experience. So I think that was another piece of it as well.
And I think that's just as important. You have
Mhm.
to have your voice be heard to understand things sometimes. So it is okay to, even if you struggle in the beginning, but building that confidence to say, okay, it doesn't matter who I'm talking to. I have to ask the question to understand what's happening.
Right. Exactly.
So it is rare for most individuals to spend the brunt of their career in not just one industry, but within one company like you did. What was that like, and how did you continue to grow and motivate yourself within the same organization over time? And what would you say to other individuals who might be with an organization for a while, might be feeling some burnout, but want to stay within the organization?
Yeah, I think for me, the biggest thing was working for an organization that you truly believed in their mission and what they were all about. I think that's what really makes it easier to stay. And then, it's good to be in an organization where there's different types of jobs within that organization as well. To where if you do start to get kind of bored with that particular type of job, you can stay with the company and move around into a different department or different area, which is what I did. Um, and so, I think, without getting into all the details of the company and all of that stuff, uh, their mission is to help service the military community, right? From a financial, all the different financial standpoints, insurance, banking, investments at one time as well, things like that. And so, that mission was I was totally in agreement with and everything. And so that made it a lot easier to stay. And so I think that's part of it. The other part of it was, they really took care of their employees too, and the benefits were great. And so there was really no between those two things, there was really nothing that drew me. Sure, I probably could have gone somewhere else and gotten paid more, but those other two things were more important to me than just trying to jump company to company, which is usually the best way to actually get promoted and make more money is to just keep moving companies. I see it all the time, especially in an upper management, executive level, things like that. But that was just not a path I wanted to go down.
I feel like you also see it more recently. In recent years, I had a boss who was in his with the company for 30 years. There were a lot of people recently during COVID who were retiring, who'd been with the company 30 plus years. And that was their mentality, their goal. They liked the company, they wanted to stay. And now you see a lot of younger professionals who might like the company, like the values, but say, I'm going to go over here because of another reason. What mindset do you where you want a younger professional to know that, like, hey, it's not always the easiest, but this is what you could do to kind of help yourself during that time as well?
Yeah, I think in my situation is probably a little bit different than a lot of folks as well because and I know we'll probably get into it, but as you mentioned earlier, now I have a private equity firm. We invest in primarily multifamily type real estate, and I had been doing that for about 20 plus years of those 25 years. So I always kind of had something going on the side as well. And so, for me, I was able to, work for a company that, again, I believed in the mission and really took care of their employees. But also I also kind of had an outlet from my creative side and my entrepreneurial side, because, that's a big part of my path, is being an entrepreneur. And that was always part of me, and always in there. And so being able to have kind of an outlet for that while still working in the corporate world was really important for me. So I think that's one of the ways that I was able to kind of stick around so long, because I had other things going on. I wasn't completely dependent on just that 9 to 5 job, right?
I think that's a key point as well, is have other things going on, whether it's, going to the gym, hanging out weekly with your friends. If you have, other commitments, whether you're volunteering, stuff like that, have something else going on so you're not just tunnel vision on the role you're in now, that 9 to 5, you check out, you wake up the next morning, you're in it again, and there's no mental break. That was a key point. Let's go back and talk about now your entrepreneurial side. So, 2 years ago, you started Head Start Equity. A little over a year ago, you left your corporate job to run Head Start Equity full time. What made you start Head Start Equity, and what made you decide at what point did you say, "You know what? I'm going to pivot now to my entrepreneurial side. I wanna do this full time and leave that corporate job."
Yeah, so a lot of that. So, like I said, I've been investing in real estate for about 20 plus years. But I started out doing a lot of single family flips, small, multifamily and single family rentals and things like that. And so, that's kind of a bulk of that 20 years, right? But a back in 2018, kind of the changing point for us as a family, my wife was diagnosed with breast cancer. And that kind of made us reflect on life and why we're doing things and the path that we were taking and everything. And fortunately, now she's cancer free, she's in remission and everything, so we're very happy about that, obviously. But that was a big life event that really made me stop and reflect on everything. And so I knew I wanted to get into larger multifamily investing, but I kind of always thought, well, I don't have $2-3 million, so just I don't have the money, so I can't do it. So I just kind of stopped there, right? But when this happened, and I started having a drive for, trying to get both of us out of our regular, 9 to 5 corporate jobs for more time with the family. Going back to your question earlier about success, right? That's a big driving factor for me. And so once that event happened, I didn't allow the, well, I don't have $2 to $3 million stop me, right? I started looking more into how are people doing this, because there were people doing it, they figured it out. So I started listening to a lot of podcasts, looking at, reading books, joined a local mastermind group here, which was one of the biggest game changers for me, because it put me around people doing that. And that showed me how I can do it. Had an education component, but it was just that was kind of what led me to that. And then the thing that I enjoy the most about what I do now is helping educate investors and the type of products that we have. I think most people will agree, they think real estate is a good investment, right? I think most people would agree with that, but a lot of people don't know where to start. They are, or some people don't have the time, they don't have an interest in it, but they know it's a good investment. So that's where I can kind of come in and help and educate them. And really, that's what I enjoy the most. That's why a lot of what I do during the day doesn't feel like a job, honestly, because I get to educate those folks, and I love that. And uh, that's really kind of helped, with that, again, feeling like it's not a job and just enjoying what I'm doing. But that was the impetus for the switch. And there was other factors as well, and the timing of me leaving my corporate job and things like that. But the goal now is to build a business so that my wife will be able to spend more time with the kids. The older you get, the more you realize, our time is limited, right? And so just spending time with the family is priority number one, having that freedom to do what we want to do. So.
I think that was a key point brought up in the fact that there could be moments where, you're happy, you're thriving, you're being successful, life's going normal, something gets thrown. And I'm so happy to hear your wife's in remission. But
Thank
there's
you.
those life moments that makes you take a step back and evaluate and go, wait, what is important to me now that I might, not have taken as much count or maybe for granted of that time? That's what's important. I want to pivot. How can I do that? And what do I need to do? Just let's get done. How, during that transition, how did you say, okay, these are the tools I have? You were listening to podcasts, reading books. This is the concepts I'm missing. How can I apply them and get them? What was that mindset like?
So, honestly, it'll probably sound a little cliche and too simple, but I just looked at it like failure wasn't an option. So, I was gonna push forward and move through to figure out how to do these things, regardless of what anybody around me was saying. I just kind of dove all in head first. I no pun intended, but just kind of just going for it, and that saying success is on the other side of fear is so true, right? So you just kind of have to get over that. And I think that was the biggest thing for me, was just moving forward. And when opportunities presented themselves, jumping in and being prepared and not being afraid to fail, you know um, I think is huge. And so, in the mastermind group that I'm a part of, there were a lot of people in the group, but I was brand new, and I was just jumping in and trying to learn as much as I could and volunteer for things and just get in and do what I could. And so I think that was one of the most important factors for me.
How did joining that group, you talked a little bit about how that was such a game changer to you and everything. What would you say to others who are debating about joining a local professional group or a group that could advance them in countless ways, but might be leaning against it because they don't know what the benefits are or
Yeah.
how awesome it is? Let's be honest. They are
Yeah.
great.
Yeah.
I'm a big fan of them. So,
Yeah.
can you tell us a little bit about what that takeaway has been for you and why others should join those professional groups?
Yeah. So, and you may have to go through a few. And I think one of the things is it's really important to find one. This is my opinion, that's local, so that you can actually meet with the people in person, especially when it's something you're trying to learn. And, but the saying that always, there's a couple of them that always come back to me. Your network is your net worth. So, you need to get around people. You are the top five, you are the top five people you hang around with, right? Where I think one I heard the other day was your tribe is your vibe. It's a little bit
Mm.
different, but so those, I think that's the networking component of being around other people and learning. I one thing that I do regret, looking back a little bit, is not networking more when I was younger. Especially when I was in college. I was in college, and I was working full time, and I could have. There was way more opportunities to have met people. I wish I had taken advantage of that time, and that's something I would urge anybody that's going to school, is to build a network. You never know when the value may come of that friendship, right? And if it's just a friendship, that's great. But there's always a possibility that there could be a business partnership down the line or something. And so I think that's really important to build those networks. And so I think you can't go wrong. The only exception to that is just you may have to go through a few sometimes to. I think if a lot of these groups will have introductory meetings and things like that, or you can come to one of their meetings to check it out. I would do that, because you can probably pretty quickly figure out, is this right for me or not? And it may just be whoever's kind of heading that doesn't, you don't click with that person, or you don't click with the way they do things. That's possible. but I think there's a lot of value in it. And I think if I had not joined the group that I joined, I wouldn't be where I am today for sure. No doubt in my mind.
How has being part of that group after starting your company, how has that changed your mindset sometimes or make you think outside the box when you might have not viewed something the same way previously?
I, I think that the way that that happens is just being around different people, and I think as individuals, we use our own experience, and with that experience that we have limiting beliefs, right? Because we don't know what we don't know, right? Kind of a cliche saying, but it's so true. And until you're around people that have have these different experiences, you may not. I mean, it's just amazing the different things that are like, oh wow, okay, I didn't even know you can do that, right? So there's just all these different beliefs, and um, yeah, I mean, I think that's the biggest thing, is just being able to be around people that have different life experiences, that lead them to different places, and we're kind of all working together, and that's one of the things I love about what I do now, is on a lot of our apartment deals and things like that that we buy. It's a group effort. I'm not the only one doing it. I'm part of a partnership with other guys that are doing this, right? Other guys and girls that are doing this, and so that's awesome to be able to work with them. So
My question for you is why do equity investments and why these properties? What made you say multi-family homes is where I want to be? I want to do equity investments, not just real estate. And for some of these listeners, what is the difference between just doing equity investments instead of just buying property and, renting it? You have Airbnb now, things like that.
yeah, yeah. So I think, well, to answer your first question, multifamily. My feeling is, well, everybody needs a place to live, right? It's not a feeling, it's a fact. So everybody needs a place to live, and so that's one of the reasons why I like multifamily versus a lot of other commercial assets. Now, there's advantages, to some of the other assets as well, and I plan to start investing in some of those, this year as well. But what I like about multifamily is people need a place to live. Real estate in general is a physical asset, right? And the reality of it is, and I'm here in San Antonio, Texas. The reality of it is, and this is really across the country, though, there's a housing shortage. When 2008 happened, there was a lot of development and everything that stopped. Houses weren't being built anymore. Apartments weren't being built as much anymore, but there was still, the population was still growing. We were still a lot of people moving to the United States, and so the reality of it is, and we're kind of experiencing some of that's happening now again, because interest rates have gone so high, values of houses have gone up so much, and builders have started to slow down on building single family houses. But the problem is there's still not enough housing. And so, I understand why they did that, but these things, it's going to take some time. But we haven't even caught up from the demand that we have, from the deficits that were created back in 2008. We haven't even caught up with that. And now there's more slowdowns, and then COVID as well. There was a lot of slowdowns there with development and things. So there's just a lot of opportunity in multifamily, and there's obviously, with everything going on now and the rates being as high as they are, we have to be pretty cautious, and we have to be mindful of that when we're making our investment decisions. But yeah, just real estate, I think, is and again, being a stockbroker at one time too, and I do still invest in stocks some, but honestly, I am a little bit firmer believer in real estate. Again, going back to being a physical asset, I can, investors that invest with me can call me up. I'm one of the owners of this apartment complex, and I can give them updates personally, right? If you invest in Tesla stock, you're not going to be talking to Elon Musk anytime soon about how the stock's going and what's going on with the company, right? So that's kind of one of the cool things about investing in these private equity type deals, is that you have direct access to the people running the project.
How has having direct access and being that manager and being able to have that face and that communication helped thrive Head Start Equity and set it apart?
Yeah, I think one of the things, and there's different, people in my position, might do things differently. One of the things that I like to kind of do to kind of stand out, I don't like to tell people, real estate's the only way to go. Don't invest in stocks, right? Or don't invest in this type of commercial property, or don't do this or don't do that. And I have people, some of my investors, and some people that haven't invested with me, they'll talk to me like, "Oh, I want to start with a single family house first." I'm like, "Well, that's great. Do that. That's what I did. That's how I started it, and it went great." I'm not one that's going to try to push them on investing with me if that's not what's in their best interest and that's not what they're looking to do. But I think that kind of what sets me apart is, and I'll just give you a real quick example, right? I like to try to reach out to my investors on a quarterly basis just to kind of see how they're doing. I really, my philosophy is getting a little bit deeper with my investors and personal, and really understanding where they're coming from. I think that's, there's minimum requirements, right, to understand the financial situation for somebody when they're investing in your things. But I like to really understand them a little bit at a more personal level. So that's one of the things that I think helps kind of differentiate me. But I had a call with one of my investors a couple of weeks ago, and he wanted to start investing in a business, like a laundromat business, right? And there's plenty of people in my position that would have been like, "Well, no, that's not what I do, but good luck," right? But I knew somebody that is a business broker and can help people buy businesses, and so we all three had lunch. And obviously, I don't directly get anything out of it, but I what I get out of it is being able to help them, and that's uh, invaluable to me to be able to help them. Whether it helps me or not is kind of irrelevant. And so that's I think that's one of the things that makes my business and the way I run things a little bit different than some of the other ones. Not to say there's not some that are like that, but that's kind of my philosophy and how I run things.
And I think that's a key point in the aspect of people are important and relationships are important. So it's building those relationships. It's not always give and take, I'll give you this, I'm going to get this back, but
Yeah.
that I want you to succeed as well. I want you to do what you want to do. I might not be able to help you, but I might be able to help you get in contact with someone who can help you.
Mhm.
How do you look at your investments, and not just investment properties, but also investing in the people you work with?
So it's really important to vet. I've in the past, back when I was doing some of the single family stuff, I had some different partnerships and things that didn't work out, and it's not necessarily because of that individual. Just things didn't work out. But I think it's really important to kind of make sure that you're partnering with folks that you have similar beliefs. And so I think that's really vital. And I don't like to partner with anybody that I haven't built some type of a relationship with over some period of time. It doesn't have to be years or anything like that. But I'm not one to go jump on a deal with somebody that I just met a couple of days ago or a couple of weeks ago, just because it looks like a great opportunity. If I don't know that person and I haven't gotten to build rapport with that person, then I don't want to invest with that person. And I wouldn't ask somebody that I partner with, or any of my investors, I wouldn't ask them to invest with them either. So
And I'm I'm wondering, investment for some people can mean different things, different monetary money, different commitments. How do you gauge with individuals on having that sometimes hard conversation, sometimes not the conversation someone wants to have because it could be messy of, hey, this is what I could commit. How do you evaluate how much you want to commit, time and money wise?
yeah, and I think one of the cool things that I'm kind of able to help bring to that conversation when I'm talking to a potential investor or even an existing investor is the experience that I have, the previous experience being a stockbroker and financial advisor, and helping people with that. So there's all kinds of different ways to help educate people. And again, I don't just talk about real estate. I mean, I've had plenty of investors who ask me about stocks and investing in stocks. I don't get into recommending individual stocks and stuff like that. I don't have time to follow those things, so I wouldn't feel comfortable doing that. But um I think that it really comes down to kind of what you mentioned, what they're comfortable with. And, I've had this conversation with investors multiple times where, they're kind of on the fence. They're not sure if they should invest. And I just tell them, then don't do it. Because a lot of these deals that we do, your money is locked up for 5 to 7 years. You can't, it's not like you can call me and say, hey, I need to get my money out. These aren't those types of investments. And so, you know, I flat out tell them, don't do it. Wait until, maybe you've seen a few more deals, learn a little bit more about it, how it's going, and then do it. Because the last thing I want is somebody losing sleep because they regret, investing and making a decision that they made. And then they're calling me a week or two later and saying, I need to get my money out. I'm not comfortable, right? Um, I don't want that to happen to people. One of the cool things I will say though about one of the things I like about real estate versus the stock market is that it does help take some of the emotion out of the picture. And I say that because when you invest in stocks, right, you can just log on online, click a button, and sell your stock if you're nervous or something. Some report came out, or Russia attacks Ukraine, right? You can just sell it all, and maybe it's not the best time to do that. With real estate, it's not like that, unless you're investing in REITs or something like that. It's you can't just push a button and sell that apartment complex, which is good, I think, because it allows you to stop, reflect, and not make an emotional decision, which is a problem that a ton of investors, and I've had that problem as well. It's one of the reasons why I don't invest in stock that much. I most of the investments I have in the market are more mutual funds, S&P 500 index funds, things like that. Individual stocks would probably drive me nuts because I don't follow them enough, and then I would get emotional myself. And so I kind of try to stay away from that. But yeah, I hope that it helps answer your question. But
Yeah. How do you, let's take this a step farther. Emotions, like you said, especially in stock, you could log on and just be like, "Oh, well, I'm gonna buy this up. This is like great," and buy it up, and then you're like, "Wait, I just really spent all this money on that. Like, what did I do?"
yeah.
Emotions can be great, but sometimes it could deteriorate your goal as well as your vision,
hmm
and can make you make some quick decisions that might not be the best. How do you try to take your emotions out of looking at investment properties and making those decisions?
Yeah, I think, a lot of my investments now are, these are, 15, 20 plus $1 million properties. So you really can't, you just cannot let emotions get involved when you're doing something like that, right? It's all about the numbers. We run our numbers, we do our underwriting, our pro forma, all that stuff, right? There's no emotion involved in that. And then the other component of it for what we do is, even if we think it's a great deal, we have to get a loan on the property. The bank's got to agree with us. So even if we wanted to make an emotional deal and be like, oh, this is great, if the bank looks at it and they're like, no, this is horrible, what are you thinking, right? You're not going to be able to get it anyway. So that helps kind of take an emotional aspect out of it. But the other part for me is, I have to be a good steward of my investors money too. And so I don't go into these properties looking at, oh, how much money can I make? I mean, obviously I need to make money to make a living, but it's more of a risk reward type thing, right? So you have to also look at the risk, not just the reward. And so, that's always top of my mind is the risk that, you could potentially lose money on this deal. And so I'm always, that's kind of my number one, priority always is, protecting my investors the best that I can.
And I think it's important to realize something you said there is you talked about having those checks and balances in place. And those checks and balances really do help in making sure a decision is right for you, your company, whatever you're trying to do, whether it's personally, just, maybe buy a product or invest in an item or professionally go around. It's having those checks and balances in place that could be the difference of making that rash decision because it sounds like a great idea. I can make a lot of money, especially sometimes when you think you can make fast money. It's being
Right.
like, right? A lot of people now want to make that money fast. So how
Mhm.
can we take a step back and say, okay, it sounds like it's going to be really good, but is the outcome really what I'm looking for? So you don't have those sleepless nights and try calling someone and being like, I need my money back. Like, what did I do? You need to give it
Yeah.
all back to me, especially in cases like yours, where you said, which is really an interesting fact of investments, can be 5 to 7 years before you start seeing that and longer. So when you would put your money in, it's working on something. So
Mhm.
once you put it in and you invest, you can't just say, okay, I need it back. Just give it to me because it's building something.
Right.
So you are currently adding to your portfolio
Mhm.
of, different tools in your toolbox,
Mhm.
entrepreneurial experiences by creating a real estate fund. Can you tell us what a real estate fund is and why you decided to start creating this?
Yeah, so a real estate fund, which is I'm going to be launching a real estate fund probably here in the next couple of months. So basically, there's different ways to do it, but the real estate fund that I'm going to be providing is going to be a multi-asset fund, and so it's going to do a couple of things. One, it's going to allow me to work with some of the best sponsors and partners that are doing what I'm doing, and just kind of the cream of the crop, if you will, and then being able to kind of cherry pick the deals that I want to be involved in a little bit more as well. And so it's going to allow me to do that. The fund is going to be open to just accredited investors, but it's going to be a fund that is just going to be multifamily properties, and it's just going to be in Texas, because Texas is where I'm from, born and raised, and I really, there's a lot of great real estate markets around the country, but I feel like Texas hasn't doesn't go up as high, but doesn't go down as low, right? It doesn't have the highs and lows like some of the other areas, like a Phoenix and a Florida or some of those other areas, which can be good investments too. I've invested in some of those as well myself, but I think that going back to the risk reward part, right? And there's just so many people. There's I want to say there's over 1,000 people a day moving to Texas. In San Antonio, there's over 120 a day moving to San Antonio. So going back to that whole housing shortage thing, right? There's a housing shortage here, and so that's one of the reasons why we're going to focus here. But it's going to be a fund that's going to allow people to diversify too. So if somebody invests $50,000 in a deal, they're going to be able to diversify across multiple products and multiple complexes instead of putting that all into one particular deal, which again helps provide some risk protection there with the diversification. So that's a little bit about the fund, but I'm really excited about that.
I have two things I want to touch upon. Not that we haven't asked a lot of questions and had a great discussion so far, but I have more. But let's start with the first. What made you decide now is the time to start this fund? And what has that process been like for you in creating the fund?
Um, well, the reason why now is because I think this is right now is obviously there's a little bit more risk right now with what's going on in the economy and everything, potential recession, all those types of fears, and there's definitely some legitimate concerns there. And by creating the fund, it's going to give me opportunities, like I said, to invest with some of the best partners that are doing these deals, and that goes back to kind of reducing some of that risk as well. And so that's one of the reasons why the fund, and why now. What was the other question? I'm sorry.
The other question, no, you're fine. The other
Okay.
question was, what have you learned
Oh yeah.
and what has the journey been like in creating this fund and that process?
Yeah, that's been a journey. It's definitely not, a lot of calls with attorneys and, different people in the industry and things like that to try to better understand how some of these things work. And but yeah, it's been a very good learning opportunity. I've been a fund manager on a fund before. but it wasn't my fund. So this will be the first time that I'll be involved in, with my own fund. But yeah, it's been a journey. This started, I guess, back in February, March of last year. So, it takes time to do these things. Again, I'm not one to kind of rush into things. So, yeah, it's been a journey, but it's been fun.
And I think that's the important aspect and an underlying theme of some of the things we've talked about today is not rushing into something. Evaluate it, make sure you're comfortable, make sure it's the right decision. But what I've also heard, and I think is just as critical, if not more critical, from you today, continuously throughout our conversation, is how important it is to have your checks and balances and make sure you're doing it the proper way. Like you just said, you were on these all these phone calls, you're making sure you're setting things up properly. You're trying to learn as much as you can about it so it's done properly.
Mhm.
What is it like now starting this fund, getting investors, and why would someone invest in this fund particularly?
Yeah, so I've had some cursory discussions with investors on the fund, kind of letting them know, this is on its way, this is coming. But in terms of the reasons to invest in the fund, kind of goes back to some of the things I mentioned, being able to be diversified, being able to invest in a market that is just going to continue to grow. Texas, like I said, there's a lot of people moving to the state. Texas is, I won't get into all the politics and all that stuff, but the reality of it is Texas is a very business friendly state. And so there's a lot of businesses moving here, and so that obviously creates the population growth and with employment and everything. And so, I think I feel like Texas is one of the best markets to invest in when it comes to multifamily. We're going to be focusing on mostly the bigger markets: San Antonio, Houston, Dallas, Austin, those type of markets. And I've got some experience in some of those markets already. But the diversification is a big factor. So I think those are the biggest reasons. And it's going to be fun. I mean, it's going to be a great fund. It is. One of the interesting things is, some people will ask me, well, is now a good time to invest, with everything kind of going on and a potential recession? There's different ways to look at it, but the ways that I look at it is, when everybody else is afraid, that's the time you want to invest, right? When everybody else is selling. Not that there's a lot of selling happening in multifamily. It's kind of the opposite a little bit right now, just because people feel like, well, we can't get as high a price as we used to be able to because rates have gone up and all that stuff. But I think when there's fear, there's opportunity. And I think that's, you have to, going back to getting over fear and stuff like that. Like you have to be more cautious though, for the things that are going on with the economy. It does make me pause a little bit and scrutinize underwriting a little bit more and some of the projections and things like that. But it's just, the fear does create opportunity.
How have you managed, your current investments and starting this fund every day? Like, what has that balance been like?
Yeah, it's been interesting because one of the biggest things that has changed for me now that I'm doing this full time, being in a corporate job for 25 years, you're used to kind of a certain schedule. You're used to kind of meetings being scheduled for you, just thrown on your calendar. You have no control over. You have to be here. You have to do this, right? And once I didn't have those obligations anymore, I'm home and I'm like, man, okay, I need to do this. I need to do that. And then I realized, okay, there's some things I need to do that aren't getting done. And I realized I had to start time blocking. Time blocking is something that I think is vital for it. And this even works in the corporate world too. I just never did it in the corporate world, but time blocking so that you can just really focus and shut everything else off and get stuff done. And so, I noticed that there was things I needed to do for months that weren't happening. And all of a sudden, once I time block, it gets done in a few days. It was just, it was amazing when you really focus on something, how quickly you can get it done. So that was one of the biggest things for me. It's a challenge when you've been in a corporate world for so long. and then you go to, hey, I'm got this thing going on, and there's all this. I don't want to say time, because there's not a ton of time. There's so much to do, but it's having to figure out and prioritize those things a little bit differently. So that was one of the biggest challenges for me, and it continues to be, honestly. I mean, it's just, you know, and I work a lot from home. That's one of the beauties of the job, is being able to do that, and which is awesome. During the summer and things like that, getting to spend time with the kids, and so that's been really awesome.
I think a key aspect you brought up there is the managing time and the priorities. Priorities could change every day, but you also have to create the tools and the rhythm for yourself of understanding this is what works for me. This is how I need to block my time. This is what I could get done. This is like, and kind of manage all those, some say the juggling balls that are in the air, how to make that best work for you because not everything, my way I operate could be different than the way you operate. And we could get what we need to both get done, but in different ways. One thing you touched upon earlier and continuously is the diversification, especially in the fund. Why is diversification so important?
So diversification is really important for risk purposes, right? So, I do know people that are all in on one thing, whether it's the stock market, whether it's real estate, and that's all they invest in. And you know, you can do well that way. But for me, I think that, being diversified, it allows you to protect your downside risk a little bit. Because if you're all in, and diversification can mean a lot of different things in different ways, right? So diversified meaning I have some in stocks, I have some in bonds. That's what diversification is mostly talked about when you hear diversification in investing. But also in real estate, right? I think it's important for real estate to be a component of people's investment as well. But I'm not necessarily one that believes it should all be in real estate. But even if it is, there's diversification within real estate, right? You can diversify into different states, different cities. You can diversify with different people doing what I do, right? So, and that's one of the beauties of the fund as well, is that, the deals that I'm going to invest in through the fund, like I said, I'm going to be working with some of the best syndicators doing what I do in the state. And so that's going to give a great opportunity for people that invest in the fund to be diversified as well, because it's important to diversify who you're investing with also. And so that's why I think that, diversification is so important. And if you put, so I did invest a little bit of money in crypto,
Mhm.
just not. I really shouldn't say invest. Invest is not a good word to use in the same sense with crypto, in my opinion. But it's to me. So I invest or put money into crypto with only the amount that I was comfortable losing at all. Right. Um, it could go up. It's done. I mean, if you look at where it is now compared to where it started, obviously it's way above where it started, right? It was much higher. So the thing is if somebody's like, oh, I believe in crypto more than anything else, and I'm going to put all my money in there, and had they done that like a year ago, they would really be hurting right now. And so that's where I think it's important to diversify, because you need to be into different types of investments, and it's just really a risk mitigation tactic.
Brian, how can people get in touch with you if they would like to connect with you or possibly invest in your fund?
Yeah, so you could go to my website. It's just headstartequity.com, or shoot me an email at brian@headstartequity.com. You can, if you go to the website, you can schedule a call with me, or just shoot me an email. I'm, like I said, I'm here. I'm willing to help. And if somebody does an investment with me, that's fine. If I can help them in any other way, I'll do my best.
Thank you, Brian, for all of your insight today. It was great
Yes,
talking to you.
thank you for having me on. I appreciate it.
A few of our key takeaways from today's conversation are: work for an organization where you align with the values of that organization. It creates a better mindset, a better work environment, and it could really help you thrive and grow when your mental state and values align with what the company's values are and mission is, as well as your network is your net worth. I think that is such a key point. It could be friends, it could be someone you network with today. It's growing that relationship and having that communication. And like Brian said, you never know whether it's today, 10 years from now, 20 years from now, how that person can play a role in what you're doing and can help you, as well as you have to make your time blocks, and they're important for you in order to operate. Those time blocks can be key so you don't lose your mind. No one likes being stressed and no one wants to lose their mind. So those time blocks can really help you stay on your path, or even if you write it down in a planner, keep you on task. This was a great episode with our top-notch guest, Brian Head. Thank you for listening and have a successful day. Awesome.
All
Thank you,
right.
Ryan. That was a great
Yeah.
episode.
Thank you. Thanks for having me. I appreciate it.
Yeah, of course. And this, I will send you the links. It's going to go live on Tuesday. So I'll
Oh,
send you
wow.
the
Okay.
stuff. I'll share. Yeah, we're going fast. I was like, when we initially talked in December, I was like, I want Brian to be done, like posted in January. Like I had it in my head. So I was like, we're going to do it. Um